It's Your Money with Linda Cools. Good morning, Linda.
Good morning.
Well, you know, we look at the stock market and people say, I'd like to invest, but I'm afraid these things in Europe are going to be really bad, and I'm afraid of this, and I'm afraid of that. Well, how can we get this into our investment?
That's a very good
psychology?
point. You know, when we get in periods like this where the markets are really volatile, it's real easy to focus on something else as being an excuse for not participating in the market. So what we want to do is go over the 5 major myths that people have when it comes to investing. And the first one is the market is an unsafe place until the crisis in Europe is over.
Okay.
That's myth number 1. And yeah, Europe is a scary place right now, and it has been the primary source of the volatility. Debt problems are not good, and what's even worse is Europe is now sliding into a recession, which is going to make it even more difficult to get the budget deficits in line. But what you have to remember is the news here at home and in other international countries are still positive. You know, we have months here and there of not such good data, but overall, the news is positive. Job growth is continuing. Companies are in better shape than they've ever been in. So try not to focus on Europe and talk yourself into that being a reason why the markets are a bad place to be.
Yeah, well, people think if something breaks really bad in Europe, that the entire market's going to go down. It'll go down 10%, maybe even 20%. But this happens quite often. I mean, we have a 10% drop almost every single year.
On average, we get a 10% correction once a year.
Yeah.
We get a 20% bear market once every 3 years. So there's always going to be a catalyst. And just because Europe has issues doesn't mean that they're going to be the downfall of everything. So we believe that investors can address that turmoil in Europe by paying close attention to their diversification across the other countries and across the U.S. Now, diversification does not guarantee you're going to have a profit or necessarily protect against losses. However, it does level out the volatility, and your bigger risk, quite honestly, is not meeting your long-term goals by sitting on the sidelines.
If you'd like to talk with Linda further about the myths, and we're going to have some more myths this week, please feel free to give her a call at 423-7734. That's 423-7734. Linda Cools from Edward Jones, and that's not a myth.